All right, gentlemen. So where we're at here in the markets, everything's been bleeding. Altcoins had a nice flush. People are in shambles, even though we're much higher than where we were in August and September. So you're thinking, all right, is it over? Are we going to continue to go up? How much more downside is there? So that's what we're going to take a look at. So on Bitcoin, we talked about this on Thursday in terms of what lows it could sweep, how much lower we could come. And basically, myself and some other traders that I respect quite a bit are drawing the range on Bitcoin like this right now. Okay. So we have top of the range right here. Make sure I clean that up. And then the bottom of the range right here. Connect that. There we go. Okay. So this is how traders are drawing this range right now on Bitcoin. So why are we drawing it like this? So you can see what market makers will do is they're going to create bear traps and bull traps on assets. The reason they do that is to catch leverage traders in a position where, or catch them with their pants down. So blow them out to the upside or blow them out to the downside from range breaks. So let me move this up right here. Yeah, like that. Oh, you rat. Anyways, you get the point. So here's the range, right? So you have the top of the range, bottom of the range, like that. So we had this deviation to the upside. So we had this pump up to 108,000. And this is where we thought, okay, we're going to the next leg up on Bitcoin. We're pumping, we're doing nicely. So we get this deviation from the range. But what you see is we come back down, retest the top of the range, right? So we come back down. We retest the top of this range. Ready? We pump. We retest the range. We pump back up. Come back down. We retest the top of the range. Retest again. And then we actually broke down. So we lost our support and we broke down back into the range. So that's called a bull trap, right? It's called a bull trap because basically when you break from a range to the upside, the bulls are saying, okay, we're going to go much higher. We're going to break out. So it's a bull trap. So they trapped the bulls, they faked them out to the upside, and then they came back down into the range, right? Then, as we broke down back into the range, we came back to the midpoint, broke down, came back up, broke down again. Now we're back to the very bottom of the range, okay? So there's two scenarios that could play out here. Now, this is on an hourly time frame, so this is very local. So I'm not saying this is going to change what we're going to do in the long term, but this is just for what you can expect here in the next couple of weeks. So two things could happen. Typically, when there's a bull trap, a range deviation to the upside, you're going to get a similar move to the downside. So you're going to get a bear trap. Okay? A bear trap is obviously just the opposite. So the bears think, oh, wow, we broke the bottom of the range. We're going to start shorting Bitcoin here on leverage. And what the market makers will do is they'll trap them. Same thing that they did to the bears or to the bulls. It'll come down here. Bears are shorting. They think, oh, it's breaking down, but then boom, it comes back up, reclaims the range, and then goes back to the upside, right? So that's typically how those would play out. So bull trap, bear trap. So if it did come down here, we're looking at, at the lowest, we're probably going to see a lot of price action right in here because there was a lot of price action in this area. So, I mean, you could see it come down to at the lowest, I'd say 85, 86,000, right? But that would be the lowest I could see it going. And then eventually we come back up to the range and then we break out. So the point that I'm making is there could still be more downside on Bitcoin, meaning that there could be a little bit more downside on Ethereum and the meme coins that we're trading. All that means is you're going to have more premier entries during this bear trap, okay? Now, I wouldn't wait until you see this play out to start accumulating. Like right here, just yesterday, and then today I'm putting in another order, which I'm going to put in our private crypto plays chat to show the gentleman whenever I buy. I've been buying more of our meme coins down here because this is the bottom of the range. So you want to be accumulating towards the bottom of a range, okay? If we do get this deviation to the downside, I'm going to buy even more down here. It's not going to change anything. But ultimately, because we're in a bullish, in a bull market right now, and we have bullish catalysts coming for the beginning of the year with the inauguration of President Trump, and then the bullish, of course, legislation that's going to come for crypto, etc. I still see it breaking to the upside. So it's not going to change our long term thesis of when we're going to sell and what's going to happen over the next couple of months. But in the short term, this is what we see playing out. Okay. So, Bees, any comments on that?
Not too much on Bitcoin specifically. I mean, I feel like for me, I'm just excited because I mean, from November 15th for 2 weeks straight, we were checking our portfolios and every single day it was up only
Yep.
for 2 weeks. And like we've talked about, whenever you're expecting to pull a 5 to 10x on an asset in 4 to 6 months, it's not going to be easy. It's not going to come at no cost. It's going to be difficult. It's going to be, emotionally taxing. So I've been watching this pullback play out. I knew it was going to happen eventually. And I'm just thinking in my head, if this is all the pullback that we're going to get, number one, we're getting better entries, exactly like you said. Number two, this is nothing. Yeah, it's yeah, it feels like something whenever you're in it, whenever you've gotten acclimated to your portfolio going up only for a couple weeks.
Yep.
Every time I check my portfolio, it was up another $5,000 to $10,000, which was great. But I knew it was gonna not last forever, wasn't gonna last for the whole cycle. And I mean, historically, we've been preaching it since March and April of this year that quarter one is when everything takes off for the coins we're invested in.
Right.
So nothing historically is supposed to happen yet. And if this is the only correction or the big correction that we get on the market for this cycle, then I'm ecstatic
Yeah.
because I thought it was going to be a lot worse.
Yeah, and that's exactly what I went over on Thursday. Is I showed them the percentage pullbacks on Bitcoin during last bull run, last cycle, and it was consistently 20%, 25%, 30% pullbacks, and then it would end up making a new all-time high and pumping higher. So we've retraced even harder in the past and previous cycles and still have made, more, obviously continue to move upward. So this pullback is nothing, gentlemen. This is just, you got to understand it's, you're getting generational entries on the assets that we're bullish on, our conviction plays. So one other thing I'll mention before we go on to the next chart is this has also been an incredibly illiquid time frame that we've been in. So the holiday season, Christmas, New Year's, a lot of people are not actively trading nor positioning nor accept whatever you want to call it. There's not a lot of volume in the market. And you can see that down here. So, obviously a lot more volume here, a lot more volume here when the price is going up or down. But as we get closer to Christmas, so right after this little area right here, when we get pumped up, the volume, you can see it drop off a cliff. So the volume spikes are much lower than the volume spikes that you had earlier in the month. So volume's coming down, coming down, coming down, etc. So the volume is also not there from a trading perspective. So you can't take this as this is for sure what's going to be happening for the next 3, 4, 5 months, just because you had some recent price action that came back down into this range and broke down to the bottom of the range. You're still in a range, so it's not as if we're in a bear market now. This is simply the range that we're in. We deviated. We created a bull trap. Everybody got super excited, super bullish at 108,000. We thought it was going to go to 120K. That's what market makers do, right? They try to fake you out, break you back down. Then they're going to scare everybody. And here's the thing too. Since it's such an obvious play, this bear trap, it might not even play out, right? It really could not, right? They might just leave it at this. Right? As soon as they tap the bottom of the range perfectly, they could just send it back higher. They could. But typically it would show bear trap. So they're going to scare everybody with this bear trap, and it's going to break back down to, $86,000, $87,000, and people are going to continue to capitulate and continue to sell, not understanding that this is what they're trying to get you to do. They're trying to scare you with the bear trap you, make you sell early, make you sell for a loss if you bought at the top, etc. And then boom, they're going to pump it back into the range, pump it back to the top of the range. And that's whenever these people who sold in the bear trap are going to start chasing. They're going to start chasing and buying again up here, or buying again up here, right? At a much obviously worse price than they had originally, right?
Yeah, and I mean, I think it's important to remember too that as quick as people think it's over, it can be back.
Yep.
It's easy to look at the hour chart or the 30-minute chart and see a little bit of price action to the downside, and all of a sudden you think it's over just as quickly as it began. But all it takes is one 4-hour candle for all the excitement to come back, the sentiment around crypto to change. And yeah, I mean, we can be back as quickly as people decided it was over after the FOMC meeting. I mean, after the FOMC, it took 1 4 hour candle for everyone to think it was over.
Yep.
Like this 8 to 12 month swing trade that we've been in, that we've been preaching about, all of a sudden, people think that the plan changes because of 1 4 hour candle. It's like whenever we were really pumping up there after I think it was around November 14th, November 15th, um, somewhere in there.
Mm-hmm.
Yeah.
In here, yeah.
Yeah. So all of a sudden we started pumping. We put in multiple daily candles on Bitcoin that were $5,000 to $10,000 candles that were daily candles. So, I mean, that one just right over from where you're at right now.
Which one?
Right next to where you started the range whenever it pumped way up.
Oh yeah, right here.
Yeah. So that was December 4th.
Yeah.
So it pumped up to 104,000, then go down to the bottom of that candle.
This one right here.
No, the one right before it pumped.
This one right here.
The low right before that. Yeah, right there. So yeah, it pumped from 94,000 to 104,000 in
one day.
This is the hourly. So yeah, less than a day. So it's like, that right there, we're at 92.4 right now. It's like, imagine we got another day candle like that. We're back to 102,000. The sentiment completely changes. Everyone's freaking out. The whole vibe on X changes overnight. Now, all of a sudden, we're back.
Right.
So I think it's important for people to remember, like you said, you don't want to wait for that bear trap because, like Priamo said, it's a pretty obvious trap if it does happen. So you don't really want to bank on it, but you don't want to bank on being able to get those entries, because just as quick as we shifted to the downside, we can shift back to the upside, and all of a sudden we're cooking again. Mm-hmm. So yeah, all it takes is 1 4 hour candle. I think it's important to remember.
Yep. And before we go on to Ethereum, the one other thing I'm going to mention too, the reason we're showing you guys this is because you have to understand the competent traders, the people who make a lot of money, understand what's happening within the market. So we know when to accumulate. So what happens is everybody gets dejected, unexcited, stops paying attention, stops caring as soon as price goes down. Okay. I'm telling you, that is the most foolish thing you can do. And it is, and you're not going to like that I'm going to say this if this is you, but it's a loser mentality, because you can't be excited and care about what's happening in the markets and what's happening to your bags only when they're pumping. Because I already see this with new people that we've even helped out. They stop messaging as much once price goes down. But as soon as price is pumping, should I buy more? Should I buy more? Da, da, da. And I get it. Completely get it. I understand why. That's the whole point of it. It's emotional. Everybody thinks like that. But you cannot get unexcited just because the price went down. It has to do both for you to be able to make money. So it's times like right now that you should be looking and saying, oh, okay, we got a pullback. We might play into this bear trap, and we might even go even lower. I should be doing everything that I possibly can to put more money into the market to increase my position size and to better my average entry price, if you're able to do that, so that when we do eventually make it back to the upside up here, right, and we break out of this range definitively and we go on the next leg higher, you're making way more money off of your position as opposed to you just saying, oh, fuck it, I'm not doing anything, it's over. Then, like I just said, it pumps back up here, then it pumps back in here, and then you're all excited again. You're like, yo, Priamo, should I buy more Andy and Wolf up here when it's already fucking 5x higher? Like, I mean, yeah, you should, but you should have been buying it down here when we were just talking about it right now. So understand that you guys have to you have to learn that, because until you get that, you're just going to keep getting fucked up in these markets.
Bitcoin's at 108,000. Everyone wants the $90,000 Bitcoin entry until Bitcoin's at 90,000.
Exactly.